Well, guys, welcome back to another video. You can't really ignore what's going on in the market right now. You can't ignore it, right? Because it's probably hitting you where it hurts, in your pocketbook. Now, I made some changes in my long-term portfolio and my short-term portfolio. If you're interested in seeing my short-term portfolio, my 10K to 100K challenge, which some are joking that will turn into a 10K to 0 challenge. I'm still positive on the year in both my long-term portfolio and my short-term portfolio. I haven't lost any money. But I have made some changes to what I'm doing right now in the market, because you can't ignore what's happening. There's a chance, right, that the S&P keeps falling. There's a chance that the NASDAQ keeps falling. There's a chance that the Dow keeps falling. And if that happens, the broader market will continue to correct, and these crazy growth sector stocks, these momentum-driven stocks, will continue to fall. We're seeing it with some of our favorite companies right now. I'm getting messages from you guys constantly. I never thought I'd see BNGO at $7 again. I never thought I'd see Nano Dimension at $7 again. I never thought I'd see SENS under $3. We are going to talk a little bit about Sensionics in this video. They released Q4 earnings. They beat estimates a little bit, and they're trading up after hours. But again, we're still under $3 per share on Sensionics, and a lot of us, right, when we're in that crazy, exuberant sort of bubble mentality of the stock market, you don't see any of your investments ever going down. But you have to be prepared always for that eventuality. Just like right now, you have to be prepared and potentially planning for the stock market to recover or start to recover, right? Most of you are probably feeling, again, like you maybe you don't want to invest anymore. Maybe you're new to this. You just started investing a couple weeks ago, because I've heard that story too. And you don't want to do it anymore. Because right now, and I keep telling people this over on my Discord, people are reaching out over and over again, and I keep telling this over on my Discord. If you can get through this moment right now, this time in the stock market, without panicking, you will be a better investor down the road. Now, I'm not going to tell you or anybody that you're stupid for selling if you sell right now. But I will tell you that people that I've surveyed and asked, hey, are you happy you held on through the crash last year? Most of them say yes, that they're happy, that they held on, that they have more money now than they did before the crash last year in March. And a lot of people were paralyzed. I've heard this as well. So let's say you're holding on to your stocks, right? January, you're running high. February, you're like, ooh, and then March, it just tanks, right? Which a lot of companies lost a ton of value, similar to what's happening the past few weeks. Now, that downturn lasted a little over 3 weeks, 23 days, I believe, before it started to recover. Now, a lot of people, right? We were back to level, right? You saw this big dip here, right? I need like a whiteboard or something, huh? You saw this. Okay, so let's pretend this hand. Hopefully you can see my hand in the camera. Let's pretend this is the March drop, okay? And then we started to recover. By the time July rolled around, we were back to level, essentially, for most of the companies that fell really, really hard. Tesla, let's say, right? Amazon, a lot of companies just tanked, even big companies, right? So a lot of companies that dropped here had recovered by the time summer came around, okay? Now, all the way up, I'm hearing from people that they were paralyzed, right? That they didn't invest until we got back to here. Even if they sold, right, at the bottom, they didn't buy back until they were up here. They just lost all of these potential gains, right? They lost a bunch of money, and then they bought in at the highs again. And yeah, a lot of people made money from July on in the market. It was a really, really good 6 months in the market. Like, fantastic. A lot of people made a ton of money. But if you sell now, if you have a long-term portfolio, and I'm not talking about swing trading or day trading, very, very different mindset. because I do swing trading as well. If you sell out of some of these stocks that you believe in, if you really believe in them long term, right now, if you sell out of them right now, you're probably going to be kicking yourself in a couple years. If the companies have good fundamentals, if you have really high conviction in them, but you also have to think maybe you're wrong. I don't know, right? You've got to think, because if you're stuck in this bubble of exuberance, right? If you've making all your decisions based on that logic, some of the companies that you fell in love with over this time frame may be not the best companies to be investing in long term. But companies like Tesla dropping down to $600 today, like 600 flat, getting potentially into the 5s, maybe even the 4s over the next week or so if the market continues to fall. Do you really think that Tesla's going to stay down forever? Maybe. But I bought some Tesla, even though I think it could fall a little further. I bought some Tesla the other day in my WeBull portfolio. That's a long-term hold for me because I think it's going to be a $1.5 trillion company at some point. So the money I put in now could potentially 3x, even though the stock has gone up just a ton over the past few years. So companies right now that you love, that you believe in, the last place you want to be selling is at the bottom. And I'm not saying that this is the bottom, but the last place you want to be selling is when the market is red, when everybody else is selling too. You kind of want to be doing the opposite. So what a lot of smart investors are doing right now is they're either averaging into positions that are beat down right now, right? Or they're sitting on the sidelines and they're saying, okay, I'm gonna wait a little bit longer. They're maybe looking at technical analysis for the S&P or the NASDAQ to kind of fall below support levels or potentially show sign of correcting back upwards. And if they're doing that, they're sitting on the side with some cash, ready to pounce on opportunities that have good fundamentals, that will probably recover quickest. And the ones that are beat down the most right now will probably recover the quickest once a recovery starts happening. And it will happen. It's just a matter of time. Could we have a broad market correction that lasts a long time? Sure. Is it likely? No. Not right now. Not with the economic environment we have right now, where we're still we still have this they're printing a lot of money. Essentially, we have trillions of dollars potentially going into the market very, very soon, right? Once stimulus gets passed, we have so much money going into the stock market, so much money going into the economy. I don't think that this is the end of it all for the next few years, or we're just going to be in this market where we're trading sideways for a while. I don't think that's going to happen. Now, this bull run has lasted a long time. Are we due for some sort of correction? Yeah, we are, but I think it's happening right now. So we'll see. Guys, you have to decide what you want to do. And if you're listening to, I don't know, there are a ton of YouTubers out there right now that just based on views are making these, okay, the market's crashing, it's all crumbling around us videos. And that probably doesn't make you feel good, right? It probably doesn't make you feel like you should be investing in the market. And I don't know, most of this video is probably just a freaking ramble anyway. That's fine, forgive me. It's kind of how I feel. But I'm trying to make videos for you that aren't all doom and gloom right now. That are more logic driven and rationale driven, because it's a tough time right now in the market, and I understand. And maybe some of you have never been through any sort of downturn at all. But again, those that I ask, hey, are you happy you held on through the downturn in March? Most of them say yes, that they have more money now than they did before. And some people are kicking themselves, most people are kicking themselves for not taking advantage of buying the dip last time. And you've got to pick whether you're either one or two people, right? In the broader scheme of things, you either think, right, that the market will recover, or you don't think that the market will recover. That's where you have to place yourself. Pick one of those. If you think the market will recover at some point, even if it's a year from now, if you think the market will recover from here, meaning whatever stock you want to invest in, Tesla, so let's say, okay? Keep using Tesla. If you think that Tesla will never recover from where we are right now, okay, that's fine. That makes sense. You probably shouldn't be investing in the stock market. If you think Tesla will go up from here eventually, that's another choice that you have to make. It's up to you. Either you think the market will recover or you don't. Pick one of those things. Pick one. And that's how you should invest. But right now, if you think the market will recover from here, most of these stocks that have fallen a ton, as long as they have good fundamentals and they're a good business, they have good IP, whatever it is, right? They probably will recover from here, and right now is a buying opportunity. Okay, rant over. Let's talk about SENS really quick. SENS is up almost 7% after hours, and it's based on some news, right? That they actually surpassed. They had guidance of $3.1 million for revenue, and they hit $3.9 million worth of revenue. Now, if we look at the broader broader picture for SENS, it doesn't look fantastic. Okay, it just doesn't. So if you look at how much revenue they had, let's say 2019. Okay, they had total revenue of $21 million. Total revenue of $21.3 million in 2019, and only $4.9 million in 2020. That's not great. I didn't listen to the investor call, so I don't know what exactly was the reason for that. It looks like almost all of their revenue, like a ton of their revenue, came from outside of the United States. I would anticipate that the 180-day continuous glucose monitoring EverSense system that they have already working in Europe to be the big reason for that. And once we have FDA approval here in the US, I think we should see a big influx in revenue here as well, and a big influx in share price. I'm still holding on to this company in my long-term portfolio. I still believe in it long-term. I'm down a lot on my investment because I purchased, like I said, right around $4, and now we're right around $3. So I'm down quite a bit, but this is one of those companies that I have high conviction in. So I'm hanging on. I could lose my shorts. If my shorts were made out of money, I might lose them on this investment. But I'm willing to take that chance with a company like Sensionics. I'm willing to take that chance with a few other companies, okay? And that's the risk you take when you invest in the stock market. It's not always going to be tulip mania. It's not always going to be crazy in the market. We will have bear markets that last quite a while. We will have bull markets that last a long time. There are up and downs in the market. I just want the market to decide, are you crashing or are you not crashing? This sideways dip here, go up here, dip here, go up here, like short-term, massive movements of volatility, it just drives me bonkers, and I'm sure it drives you bonkers too. And I just want the market to decide, bull or bear market. Pick one, because as a swing trader or even a long-term investor, once you know where the market's going, you can make money in any market. And you can make a lot of money now too, based on just volatility. But it's easier to make money in the stock market when you know whether it's a bear market or a bull market. So guys, thank you so much for joining me for another video. I appreciate you. As always, if you didn't already do it, click that beautiful red subscribe button down below, and I'll see you in the next video. Thanks.